Yes, I did. So I packed it up and brought it back to the crib. Yeah,
it's your boy Crypto Blood, and welcome to another episode of My 2 Cents, where I cover non-crypto related topics such as pop culture, sports, finance, science, and automotive. And today, man, we've got the trade wars between U.S. and China are heating up, people. It is heating up, and we're going to take a look at an article that goes over what's going on, man. Dow Jones down over 600 points today. I really think this whole Trump thing is backfiring on him. Good strategy, but it looks like, you know, he bit off a little bit too much and really, I think, promised too much to the markets. He telegraphed all of these talks that they have been doing over the last 6 or 7 months, and now it looks like that is not the case. Those talks were not successful. And so we're starting to see, so now we're seeing all of that rhetoric coming out of the White House being taken out of the market from as far as price valuation goes on these indices. All the stuff that Kudlow was talking about, Larry Kudlow and Trump himself, is starting to unwind. Let's see how much short-term damage this will do. We're rocking out today too some Kanye West, Champion, off of the Graduation album. I love this album, I really did. It brings back a lot of memories for sure. I hope you guys are doing well today, and welcome to another episode of My 2 Cents. As I stated in the intro, things are heating up. Dow Jones off like 600 something points today, guys. And we're going to take a look at kind of what the catalyst was for this sell-off. As you can see out of CNBC, we've got an article that goes over China actually raising tariffs on $60 billion of U.S. goods, and that's going to start on June 1st. We're going to start seeing an impact directly in our pockets from this backlash, this move by China. The CNBC article goes on to talk about China raising tariffs on $60 billion of U.S. goods in retaliation for the Trump administration's latest decision to increase duties on $200 billion worth of Chinese products. U.S. stock market indexes fell about 2% on the trade war between the world's two largest economies. This is serious here, and we don't know what type of long-term effects this will have. We know short-term this is definitely going to be a problem. But how long do you guys think it's going to take for the plunge protection team to come in there and save the day, as they always do, right? It never fails. The article says that China will raise tariffs on $60 billion in U.S. goods in retaliation for the U.S. decision to hike duties on Chinese goods, the Chinese Finance Ministry said on Monday. Beijing will increase tariffs on more than 5,000 products to as high as 25%. Duties on some other goods will increase to 20%. Those rates will rise from either 10% or 5% previously. So we're looking at, in many cases, a double in tariff costs for us importing these goods. The move follows President Trump's decision to raise duties on $200 billion in Chinese products to 25% from 10%. The world's two largest economies have struggled to sign a trade deal and in a widening conflict that threatens to damage the global economy. The latest shot in the trade war rattled investors. Major U.S. stock indices dove more than 2% amid the escalation. The duties in large part target U.S. farmers who largely supported Trump in 2016 but suffered from previous shots in the Trump administration's trade war with China. The thousands of products include peanuts, sugar, wheat, chicken, and turkey. On Monday, Treasury Secretary Steven Mnuchin told CNBC that the sides are still involved in negotiations. He said the administration is working on dates to travel to Beijing to continue talks. Neither the White House nor the Treasury Department immediately responded to CNBC's request to comment on the tariff increase. In increasing duties on Chinese goods on Friday, the White House said Beijing backed out of major parts of the developing trade agreement, while Treasury Secretary Mnuchin and U.S. Trade Representatives Robert Lighthizer met with Chinese negotiators last week in talks Mnuchin called constructive. The sides could not strike a deal. And we've got a bar chart that shows us the trade war impacts out of Oxford Economics, and it shows that the current trade war or tariffs that we have going back and forth with China are impacting the GDP by about a negative 62 billion. But afterwards, with these new tariffs being implemented on June 1st, we're looking at over 100 billion in negative impact on GDP. Employment also a negative 200K. but afterwards will result in roughly a negative $360K in employment. Cost per household looks to be about $490, but after these new tariffs take effect, we're looking at $800 in damage to the American household. Trump, who wants to address grievances such as intellectual property theft, forced technology transfers, and trade deficits, pushed China to make a deal ahead of its retaliation on Monday morning. In a string of tweets, the president argued that tariffs are very bad for China. Trump said, "We had a great deal, almost completed, and you backed out." Trump in his tweet said, "I openly say to President Xi and all of the many friends in China that China will be hurt very badly if you don't make a deal, because companies will be forced to leave China for other countries. Too expensive to buy in China. You had a great deal, almost completed, and you backed out." The U.S. may not be done retaliating. Trump has threatened to put 25% tariffs on $325 billion in Chinese goods that remain untaxed. The president has also signaled he is content leaving the duties in place, arguing they will damage China more than they will the U.S. The president has repeatedly claimed that China bears the brunt of the costs from the tariffs, but the burden falls largely on U.S. businesses and consumers. Pressed on Sunday during a Fox News interview about Americans paying the tariffs, Trump's top economic advisor, Larry Kudlow, responded, "Fair enough. In fact, both sides will pay." Despite this, Trump claimed in a tweet Monday that there is no reason for the U.S. consumer to pay the tariffs. He also said the tariffs can be completely avoided if you buy from a non-tariffed country and you buy the product inside the U.S. The best idea, he says. My thing is, he has good intentions, but I think he lives in a bubble, people. Like, he doesn't realize that we do actually depend on China greatly. For such a move like this to occur, for us to adapt, it takes time. This is a macro level shift, and macro level moves take time to trickle down and take time to be manifested. So we may not see a reprieve from these higher prices for a year or two if things don't change. If tariffs stay where they are for the next 6 or 7 months, it's going to take a year or more for us to pivot and move in a new direction and start importing from other countries. In the meantime, a lot of businesses will be hurt. And this just shows that Trump does not fully see that it impacts us, and we actually rely on China more than maybe he's admitting. So out of Zero Hedge, it talks about the economic impact, or at least on Wall Street, is a 700 down day for the Dow, almost $700, and the yield curve reinverts. So let's take a look at what's going on here. Zero Hedge starts off by saying this is starting to get serious. One veteran trader calmly stated to us in the morning, and with the Dow now down over 700 points, the yield curve reinverting, someone better start paging Larry Kudlow to save the world. That's no doubt. Look at that. We've crashed through the 50, 100, and 200-day moving averages, and it looks like we may have closed just above the 200-day moving average. I'll have to look at it in detail, but we did close shy of 700 points down for today. But this is definitely not looking good, man. We can't, and it's a very unfortunate situation we're in when it comes to the stock market. It's so manipulated. We can't even take any pause or retracement in this bull run, because then it's all over. Everything is based on the U.S. stock market doing well, from how businesses feel, from a confidence level. I don't really go with the consumer one, because most consumers don't have stocks. Your wealthy people do. Your top 2% own probably like 80% of the stock holdings. So it's really the business's confidence that's shaken when the Dow Jones and S&P and the stock market starts to take a nose down. And then maybe from there they'll pull back on investing capital into the market. But hey, I just think we're delaying the inevitable. We should have stopped with QE many years ago. We gotta rip the Band-Aid off at some point. The longer we wait, the more it's gonna hurt. The more it is going to hurt. So you guys, let me know your thoughts about where we are today. Do you think we'll have a tariff deal in the next month or two? we literally need a tariff deal tomorrow. Like, if we don't get any pressure relief from this, it's only going to get worse. And maybe this is the black swan. You never know where that event is going to come from that is going to cause a chain reaction where even the PPT, plunge protection team, can't save us. So again, give me your feedback on where we are with things. Do you think we head lower in the stock markets? And do you think Larry Kudlow can save the day? Can he come out and make another statement to give us another month or so? I don't know, man. We've done that. They've done that so many times over the last year. I don't know how much more they can, what they say, extend and pretend. I'm not too sure how much more we can handle of that. So again, let me know your thoughts on this situation we've got going on. It's not looking great out there at all, people. That's pretty much it for today, though. That's my 2 cents. Make sure you guys like, share, and subscribe. Click that bell. And again, if you like these type of off-topic, non-crypto related videos covering other things in the world, let me know. Give me a thumbs up. That's pretty much it for today, though. It's your boy Crypto Blood. I'm out of here. Ha!